A detailed look at earnings and estimate revisions for key companies in specific sectors is what you'll get in this Sector Spotlight.
Hi, this is Shiraz Mian. The focus today is on the technology sector. What we will show you here is an update on the Q4 earnings season for the sector. We will try to dig a little deeper to understand where the growth or lack thereof is coming from, and touch briefly on what's the expectation for the current and coming quarters for the sector. As you know, technology is the biggest sector in the S&P 500 in terms of market cap. It's a big earnings contributor as well. Hasn't really done much in terms of stock price lately, but the goal here will be to get a better understanding of what's behind the developments in the sector. As you can see, we have 86.5% of the index's total market cap has reported results already. 14.1% total earnings growth, 9.5% higher revenues. This is materially better performance than we have seen from these companies in other recent periods. And as we show here, where we dig a bit deeper at the industry level, as you could see, that the 14.1% earnings growth and 9.5% revenue growth, a big chunk of that is coming from the computer and office equipment, which is primarily the hardware maker segment industry in the technology sector. A little later, we'll give you in more depth and detail what the constituent industries in the technology sector are. But let's see at the industry level how the performance thus far compares to what we have been seeing in the past. As mentioned earlier, 14.1% earnings growth is better than 6.1% earnings growth for the same companies in Q3, better than what we saw in the 4-quarter average. And as you look at the top in the first row, which is the computer office equipment industry, the best growth is coming from that. Semiconductors are doing good as well, but they have been doing good for some time. And that's the crux of it. As you are seeing in this slide, the computer office equipment industry is the largest earnings contributor. 45% of the sector's total earnings come from this industry, and you have companies like Apple, IBM, Hewlett-Packard, and all those hardware makers as part of this industry. Then you have software contributing about 30%, and semiconductor accounting for another 13% of the total earnings. And that gives you a good sense of where the growth in the industry is coming from. As you can see on this slide, you have at the aggregate level for the sector, the growth rate, earnings, and revenue is materially better than what we have been seeing from the sector in the past. The beat ratios are similarly good, particularly on the earnings side, though the revenue beat ratio is a tad bit on the weak side. But before we get way too excited and hopeful about the earnings outlook for this key sector, let's dig a little deeper and see where the growth is coming from. Here, what we are trying to do is to look at the growth that we have seen thus far with and without Apple. As we know, Apple had a blockbuster earnings report this quarter. So the slide on the left is excluding Apple. The slide on the right includes Apple. As you could see, the earnings growth and the revenue growth does not compare as favorably once Apple is taken out of the data. And that's the essence of what we are seeing for the sector at this stage. The sector's performance isn't bad, but it's not something that we should be overly excited about. The growth picture isn't as impressive once seen on an ex-Apple basis. So it's no better than what we have been seeing in the past. In fact, is a shade weaker than what we have seen in Q3 as well as in the 4-quarter average. Estimates for the current period as well as for the second quarter of 2015 have been coming down. Earnings are expected to be up about 1.5%, which is down from 6.5% at the beginning of January. And that's a trend we have been seeing across the board in other sectors as well. So the earnings picture for the broader S&P 500, including the technology sector, is nothing to be overly excited about. It's not bad, but it's not terribly great either. And that's the key takeaway I want you guys to take from this presentation today. Until next time.